In the currency quadrant, taking a look at the euro currency, which has enjoyed 6 straight sessions of higher closes and is working on, or I should say just completed, its second week higher. The high today, 108.78, was up 56 basis points, so between 0.5% and 0.6% higher. And the low today, 108.19.5, was actually 2 basis points higher than yesterday's, or I should say Wednesday's, close of 108.17.5 because of the US holiday. The futures close was 2 days ago. So we had actually a gap higher on the low today. On the close, at the New York close, I should say, we're up about 0.4% as I speak to you right now. Now we're looking at the best weekly percentage gain for the euro since the week of December 11th of last year. So that's a pretty darn good week. Services PMI in both Germany and the overall EU stayed in expansion territory. That's good news, with EU PMI coming in stronger than expected. Now this was the small to medium-sized business PMIs, the final reading for June, or the revision for June, and Germany came in at 53.1, which was lower than expectations and lower than last month. But remember, Germany is the manufacturing engine of the EU, not the services engine. And you look at the EU, which came in at 52.8, which was lower than last month, but higher than the expected revision of 52.6. And after Wednesday's European inflation numbers, which year over year came in slightly stronger than expected, these were good numbers, that they were still in expansion, but they were not overly hot. So good numbers for the euro. The dollar also weaker. Overall, the dollar weakness was the worst we've seen in the aggregate since April 29th on the day. 2 weeks ago, the market was pricing in 4 rate cuts through July of 2024 in the US, or I should say 2025, and now it's pricing in 5. And again, today's overall weak non-farm payrolls number is now the pricing in a 72% probability of a rate cut by the US in September. So that dollar weakness is a tailwind for the euro as well.